Hello guys, this is Frankie Candid FX. Right now we are about to study and learn how to understand the market structure, right? That is exactly what we're about to do right now. So most of you guys don't know how to read the market structure. So we should just understand that trading market structure is essentially learning to read the DNA of the chart. You are looking at the raw price action to determine who is in control, the buyers or the sellers. So I want to give you this. Here is a breakdown of how to identify and trade it. You understand? But before placing a trade, you must identify the current phase of the market. So the first market structure you should be looking at is the bullish trend. You understand? So bullish trend characterized by a series of higher highs and higher lows. Do you understand? So you should only look for buy opportunities. That is it. So when you have a bullish trend, just as you can see in this chart right now, you can see that we have a bullish trend and it has those higher highs and higher lows that are applied on it. You understand? These are the higher highs and the higher lows. You understand? So now this is a trade that went to our direction. So if I stretch it like this, you're going to see that the price really, our TP was hit. You understand? So now you should understand that this is a bullish trend and we have the bearish trend. These are the three things that characterize the structure of the market. So we have the bearish trend characterized by lower highs and lower lows. You should only look for sell opportunities. And then we have the ranging or the consolidation. Price, which is the ranging or the consolidation, should let me show you where the ranging and consolidation happened. This is the consolidation, this is the consolidation. So the consolidation price is trapped between a horizontal support and resistance. This is often a wait and see zone for structured traders. So this is, if you understand it, that is exactly how it works. So to trade structure effectively, you need to recognize when a trend is continuing and when it is dying. So you should also understand the break of structure. You understand the BOS, which occurs when the price closes beyond a previous higher high in an uptrend. You understand what I mean? So the break of structure, which is break of structure, let me show you BOS. You understand? This is the break of structure here. So whenever you hear a break of structure, this is exactly what it means. This is exactly what it means. You understand? This is the break of structure, which means that this structure was broken. This type of structure, this is how the structure looks. This is how the structure looks. Let me show you. The structure was broken. This is the structure. You understand? And it was broken with a strong green candle. Do you understand? So that's a structure. So this is exactly what structure looks like. Let me show you. So all you need to do is to understand how price is moving, how it is moving in zigzag. You understand? So price does not just go straight and down, just like it doesn't go up like this and stop, and then it doesn't just come down like this. No, it has to go with structure. Understand your trend line, how to trade your trend line. You understand? So trading on the structure, the bullish trend and the bearish trend. So in an uptrend, change of character occurs when the price fails to make a new higher high and instead it drops to break the most recent higher low. Do you understand? So this signals that the character of the market has shifted from bullish to bearish. Do you understand? So there is going to be a change of character that will occur before you know. So look at it, look at how it would this look at how this uptrend, look at how it happened. We had structure, we had this structure, we had this structure in place, we had this structure here. Do you understand? We had this structure, we had the immediate swing low, and we saw that price broke this structure as if it was going to the downside and it couldn't actually mitigate this low anyways. You understand? This is a low that was unable to be taken out. Do you understand? This low was not taken out actually. So but it only did sweep the liquidity around there. So we had this push to the upside, and when we had this push, we noticed that there's a break of structure, which is this structure has been broken. So after the break of structure, we started having what, a retest of structure, which occurred here. Did you see the retest of structure? Price retested this structure and continued to the upside, and we started seeing more break of structures occur in the market. Do you understand? We started seeing more break of structures happening in the market. So this is a break of structure again. So that is exactly how to understand the uptrend. So once it is breaking a structure and coming down, breaking a structure and coming down, you'll be noticing that the price is actually going to the upside. This is a bullish trend, and from this bullish trend, you notice that a structure was broken. We broke a structure here, and these are, I'm talking about we, the buyers, right? Here we broke a structure here too, and we also broke a structure here. You understand? So this is exactly how it happened. And when the continuation and the reversal from, because you need to understand the continuation and the reversal, so but I want to get there. So the signals that the character of the market has shifted from the bullish to the bearish. So now you need to understand the weight for the pullback. Do you understand? You need to understand the weight for the pullback, because when a character has been changed, when there is a change of character, there's going to be a pullback. Now let me show you. This is it. This is a change of character. Did you see that this low was broken, which means that there is now a change of character, which means that the buyers have been shifted from bullish to bearish. So that was why you are seeing that price, after price went to the upside, it failed to create a candle that was going to break this high here. You understand? There's actually, this is a high though. This is the high. After this high was formed to this upside, we could not see that. We saw that there was going to be a pullback, actually breaking our trend line, and that pullback actually broke the trend line and also broke a structure. So immediately this structure was broken, there was no need for us to be expecting a buy sentiment. You understand? So this is actually a bearish sentiment that has occurred in the market. So from looking at waiting for or expecting a buy opportunity, we are now looking for a selling opportunity. So this is why they say that you should know the weight for the pullback strategy. Price broke this structure, we have to wait for price to come back up. You understand what I mean? So why price is trading into this level, that is when we understand that this is going to be our level of supply. So the wait, you have to cultivate the act of waiting for price to come here. You understand? So for price to come after the pullback, let's continue from here. Identify the trend, confirm you have a series of higher highs and higher lows. Do you understand? So the biggest mistake beginners make is chasing the candle. If you see a massive breakout, don't jump in immediately. Market structures trading relies on the retest. So identify the trend, confirm you have a series of higher highs and higher lows. Wait for the BOS, which is the break of structure. Price breaks the previous high, find the discount, which is the discount where you can take a buy position. Like as you can see right now, price broke this previous high, and you waited for the discount to happen. This is the discount, and you took a buy position from here. So you saw that the price broke this high here. This is it. Price broke this high. Price broke this high, and you had to wait for the discount to happen. This is the discounted price. So instead of, since I'm seeing that price have broken this high, let me decide to take a buy position immediately. Taking a buy position immediately is going to be very dangerous. So it is better for you to come and buy at the discount, which is the discounted price, and you take all the profit that comes from it. So this is exactly how it happens. You understand? So you can't just come into the market and just take trades just like that, like As you can see from here, we had a break of structure and price came on, like came close to the discounted price area, and I took a buy position and we had it. So right now, so whenever price breaks a structure, is going to come back for the retest of that structure, you understand. So that is how the market works, you understand. So let's go again. So identify the trend, confirm you have a series of higher highs, so wait for the POS and then find the discounted. Use a Fibonacci tool from the recent low to the recent high. Most of you don't know how to use the Fibonacci retracement, so we'll be teaching about the Fibonacci retracement. We'll be taking a look at that particular what we call it again, indicator, right? So entry. So now look for bullish confirmation like a pin bar or engulfing candle at the previous structure. You understand? You have to look for a pin bar. There must be a rejection candle, which is this particular one. We have this rejection candle. This is the rejection candle. This is the rejection candle here. The candle came and that was a hammer, right? It rejected the floor and we had two rejections. Let me shift this. So we had two rejections actually. So that was a confirmation that price was going to go to the downside, the upside, I mean to say. So that is why we had all the courage to take the price to the upside, you understand. So now you should also use a multi-time frame analysis. That time we were teaching about the multi-time frame analysis. So I think I'm going to go into this multi-time frame analysis again so you can understand how multi-time frame analysis works. Let me get it right now. I think it is okay for me to use a current trading stuff like this. So so like right now I want to trade the multi-time frame. So first of all, I let me just do this. Let me do this. Yeah, okay. Let me keep this here. Let me keep it here, and let me just go to the 4-hour time frame so that I'll understand what I'm doing. So because if you want to trade the multi-time frame analysis, you have to start from the higher time frame down to the lower time frame. So the 4-hour time frame is going to be my overall time frame right now. So I'll be looking at what my support and resistance is before I will decide where I am taking the price to. So this is my resistance and my support. So from here, looking at the structure of the market, I will have to identify what that price has been bearish for a long time, and right now we have a push, you understand. We have what, a break of this trend line. So using this trend line is going to stand like a tool for me for my next entry in the market. So I'm going to take trades based on what this structure is giving to me. So right now I have what I call break of structure. This is a break of structure that signifies that price is definitely going to come down again. You understand what I mean, no matter where it has gone to. So we believe that price is going to, because this structure has been broken. It was broken actually. So and after this structure has been broken, we have a structure here that we are looking for the price. We are expecting that price is going to come to this structure. You understand. So what we do for the multi-time frame analysis, now we've seen that price is going up, right? And we are looking forward to sell this move, you understand, to sell it when it has gotten to this area. What we'll do is, by the time it has gotten to this area, we'll go back into our smaller time frame, which is, first of all, we'll go to the 1-hour time frame. And look for that perfect entry area where we can take that sell, which is here. Definitely here we can take a sell position from here. So now that is exactly why we have to go into the smaller time frame, so that we can see a perfect area for that to happen. And now, since I've seen that price is bullish and I want to take a bullish move, I want to take opportunity from this bullish move that is going up right now, you understand. So What I will do is I will trail into what, into the smaller time frame, like 15 minutes time frame. I'll go into the 15 minutes time frame to see a better structure where I can stay and buy the market, right? So that is exactly what I'm going to do. So before that, let's talk about this. Determine direction. Use the 4-hour time frame or daily chart to find the main trend. Refine entry. Use the 15 minutes or 5 minutes chart to find a change of character that aligns with that higher time frame direction. So that's exactly how this works, you understand. So I believe that from what I've just given to you, you understand better, you understand that price moves in waves. You understand, for the market structure, it doesn't move direct, it doesn't move up just like that, it moves in waves, you understand. So right now I'm actually looking for a better place to stay, for a better area, better level to stay and buy the price, since I've seen that price is already bullish. So I'll be watching these moves that is happening around here. I can see that what is happening here, I can see that price is going up, right? So the better is for me to take a better buy position is to wait for price to come into this my area. This is it, for price to trade back into this area. Once price trades back into this area, I will take what, a buy position. So that is why I will wait for price to come into this area for a better buy position to this area right now. Do you understand? So that is how I do the multi-time frame analysis. Instead of jumping into the market because I've seen a bullish move, I will say, okay, since I missed this move, all these moves, I will have to wait for price to come into this structure so that I will take a buy position all the way to the upside. And it's gonna look something like this. Let me say something like this. Boom, I will take it. So that is how the price, that is how the market works. So since we've seen that price is bullish, it is better for you to looking for what, bullish moves instead of bearish move until your trend line is broken. Right now trend was actually bearish and people were taking they were taking sells, right? But immediately the trend line was broken, what did they do? They started taking buy positions. So it is better for you to take a buy positions, and if you look closely very well, you will see that what happened here, this is it. This is a break of this structure. This structure was broken, and the better place to stay and buy the structure, to buy the hook, to have the better opportunities here. So that is just it. Very, very simple. So that is it. So if the daily chart is bullish but the 15 minutes chart is bearish, you are likely in a pullback. Wait for the 15 minutes chart to turn bullish again. You understand? So if like sometimes people see that price is bullish, oh, yeah, but at the end of the day, I'm looking at before our time frame. Before our time frame, I've seen that it is bullish, right? So I'll go to the 15 minutes time frame, and I'm seeing a bearish move in the 15 minutes time frame. That's equally a pullback like this. Did you see? After the 15 minutes time frame pullback happened, did you see that price continue to the upside? So that is why it is better for you to wait for the 15 minutes time frame pullback to be over for you to take a better buy opportunity. You understand? So that is exactly where I'm going to end this teaching for now, and I hope that this teaching gives you that better knowledge of how to understand. What you will always do is, first of all, do your your support and resistances first before you decide to take any other decision. Once you are able to mark out your support and resistances, once you have seen a buy position going up, you are asking yourself, you are seeing a bullish market, you are asking yourself, where is the price going? Where is the best place that price is actually trading into? You have seen that price is actually trading into this area, and you have seen what, you have seen something like this. So it means that price, if price trades into this area, there is a tendency that price is going to do what, is going to drop back to the floor. You understand? It might do something like this. You understand? So that is it. So that is why you have to be very, very meticulous with your trading. As I've seen a buy push in the market, what do? I will go into the smaller time frame to see a better area for me to take a buy position, and that buy position is happening around this area. So which means that I will still expect another candle to form and trade into this area so that I'll buy, while that candle in the 4 hour time frame will exhaust its wick and continue to the upside. I think that's exactly what price we do, and from my own experience that it has happened multiple times. So that is it. I hope that this teaching gives you the best knowledge, and just smash the like button and subscribe to my channel, and wait for more videos to be posted every time, almost 3 times in a week. So that is it. Thank you so much.